this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're firmly into 2025. We've got a month left essentially of the first quarter. Markets been slightly turbulent. Remember, I talked about getting a 10, 12, maybe a 15% pullback this year. So again, I want to stress, don't be shocked when you open your statement and you're down 10, 12, maybe 15% this year. It's going to happen. It may not happen, but we haven't had a lot of volatility the last 2 years. So this might be the year of a little more heightened volatility. Is that a reason to get nervous? Absolutely not. It is a great buying opportunity. We see the U.S. economy strong. We see earnings on the S&P 500 running about 14% earnings growth, which is phenomenal. So as I said earlier this year, volatility will be a little more heightened the first 6 months of this year. I firmly believe followed by a little bit more evenness the last half of the year, but I look for possible gains throughout the year. And if the earnings do grow 14% as projected, economy is strong, no signs of recession at all, interest rates are fairly stable, actually have come down on their own accord a little bit. These are all net positives for the economy. And I sent out a video yesterday or a couple days ago about tariffs and what I feel about tariffs and what goes on. Tariffs are actually net positive for the U.S. economy long term because it's going to bring back, obviously, trade and companies and jobs and all kinds of great things. So ultimately, while people can fearmonger about, oh my gosh, we're going to have tariffs, it's going to hurt the U.S. economy, factually not really, and it really doesn't increase inflation that much. What's going to help more is bringing more jobs back, more manufacturing, fixing our huge trade deficit, making it smaller. That's going to grow the U.S. economy. Jobs, wages are all also vital. Those would increase even under any kind of tariff plan. So we are very optimistic for 2025, and we're even more optimistic over the next 4 years. So remember, every year is not up 15%. Sometimes you're down 3 or 4% in a year. We're going to have more volatility this year. Don't be shocked at all. We'll make adjustments in portfolios as necessary. We like where we're at currently today, and we like what the current administration is doing. They are not only are they slashing regulations, they're working on tariffs, they're working on the budget, they're cutting the budget like crazy. They're looking to cut $1 trillion out of the budget, raise revenues, tax revenues by $1 trillion. That'll at least get us to a balanced budget scenario. And then from that point, we should hopefully, as we continue to grow the U.S. economy, we'll bring in more revenues to the government that they can start paying down these debts that we have accrued over decades. Again, that is more positive for U.S. growth. And the reason we're not invested in international investments are not going to do well long term because those countries have not figured out after decades their policies are bad, they're non-growth, and they're going to lose a lot of the business that they do have. It's going to come back to the U.S., which is positive for the U.S. and, in our opinion, the U.S. stock market. As a client, if you have any concerns, please call the office. And remember, we always appreciate your business and trust, and we really appreciate those referrals. We've had a number of referrals from clients. Remember, we manage money in, I think, 14 different states today. If you have a friend or family member or a neighbor, they're probably not as happy as you are with the person they're utilizing, and their money's probably not being managed at all because they're working with a so-called advisor. We love your business. We love your referrals. Think about us when you're talking to friends and family and give us that next referral. Have a safe and profitable day.